Alright, testing sound, testing sound. Check, mic check. Everything good. Alright, we're about to get into it, guys. Right here. Okay. So first thing I'm gonna teach, I'm just teaching today, and I'm gonna be doing some live trading, do charts, break down the charts, post the charts in a group, get ready for the week. It's a good Sunday, good morning trading. We had a good morning trading the premium, made some good money. Alright, let's get started. I'll do some teaching right now. I'll do some charting right now. You guys can jump in trades with me live if you want to take the same trades. You'll be seeing the premium trades going right now if you're here. So that'd be cool. Market's on pause right now. Number 9. Bitcoin market looking great. Bitstamp. Make sure you guys see the right one. So Bitcoin's moving today, really nice. We caught the down move yesterday. We came back up in the premium, so that's a great trade. Let's see, the first thing I'm gonna teach. All right, so I have a list of questions from yesterday I have to teach. So first, I'm gonna get into risk management. Teach some risk management right now, and let's get into it. Open up something to teach that in. Okay, teaching risk management. Document editor. Docs. Doc. Risk management. So let me see what the best way to teach this is. Risk management. I'm going to transfer this over so you guys can see it. On screen. We're going to get into risk management. So I think it's an important first lesson, because without risk management, you're not going to be able to grow any accounts. You're not going to have any success trading. You're going to be going up. You're going to be going down. You're not going to know how much money to put in an account. You're going to be blowing your accounts. You never leave beginner or intermediate level without it. So let's get into it. All right, so the first thing I want to teach in risk management is risk reward ratio. The second thing we're going to teach in risk management after risk reward ratio is going to be, let me go to my notes. Lot size. After knowing lot sizes, you have to know the have to know your risk reward ratio, you have to know your lot size, stop loss, take profit. So some of the stuff I'm going to teach is very advanced, but I'm going to teach it as if everyone is a beginner, and you all should be able to learn something from it. So it's going to be really cool. You can ask questions while it's going along. This live lesson is not going to be reposted. This is going to be given away to the premium members. So it'll be a premium lesson live for you guys. Let me see. So let's start risk reward ratio. Now, risk reward ratio is the most important thing because I have to teach equity curves too. Equity curve. So risk reward ratio is the most important thing. Basically, you got to know how much you're willing to risk per trade, how much you're willing to win per trade. That's the simple definition of it. So let's say you have a $10 account just for simple math, or a $100 account for simple math, and every trade you want to risk $1, and your reward is how much you want to make back. So you want to risk $1 every trade, so your stop loss total would be that $1 risk, and your reward is going to be how much you want to get back. So let's say you set it to $3, $4, $5. You can set the rewards that you want to get. So risk, how much you lose on trade, reward, how much you want to win. And the reason why you need to know these two numbers is so you can build an equity curve. So example of risk reward ratio, I'll go here. Let's see, I'll go over here. So this trade right here, we have a risk of 4. We had a reward of a risk of 1, reward of 4. So we're risking $1. If we had a $100 account and we risked 1%, we're risking $1 to make $4. So the reason why that's important to know is when we go into our equity curve simulator and we check out how to grow our accounts properly, making sure everyone can see this. So the reason why you need to know your risk reward. So on that trade, we risk 4 to make 1. We have a $100 account. Let's say we're just 50-50. Let's say we're just we're flipping a coin, and the market's either gonna go up or down. So we're flipping a coin, 50-50 odds on winning. We have no trading skills besides this. So I'm treating you guys are complete beginners wherever you're at. 50-50 odds. And when we trade together, we have higher odds because you're using better trades. But if you were just a beginner with 50-50 odds, you took 100 trades, or I'll just put 30 trades for now. Say you take 1 trade a day for a month, and the risk per trade is 1%, and you have a $100 account. When you're running equity curves, at the end of the month, your account will be at 150, so you're up 50%, 60% here, and you will run a bunch of simulations. And you guys get this link so you can do all this in the course and stuff. You can run your own simulations. But the risk reward is important because you need to know how your equity curve is going to grow over time, how it's going to simulate out over time. And this is super important. And this alone will put you on an advanced level because you understand if you're trading a losing strategy or if you're trading a winning strategy before you even put the trade on. So that's why risk reward ratio is important, because you need to know that. After that, we're going to go into lot size. Your lot size is important because if you don't understand how much lot size to use to equal your risk, then you might put a big lot size, and it might make you over risk how much you actually need to risk in the trade. And now instead of risking 1% of your account or 3% or 5%, you're risking 60% of your account. You're risking 50% of your account, and you just end up risking too much. And because you risk too much, even if you hit that trade, over time of doing that, eventually your account will go up and come back down. For example, if I start risking 60% of my account on a trade, I can come up, but I can easily fall back down, or I can just go straight down to zero and stay at zero. And this is how a lot of people equity curves look. They just go up and down, up and down. Some trades you see on YouTube and stuff like that, they're just going up and down, up and down. A lot of traders go. Sometimes they get lucky, they shoot up, and eventually, after going up, come back down, because the equity curve is never going to be right. It's a random distribution over time. It's a random distribution formula, so it's using random distribution over time when we talk about risk management. So lot size is important to understand. So if you're using a 0.01 lot size, this means that every time the chart moves one tick, just one click on your broker, whatever your broker is, it'll be different, but every time it moves just one click, you go up 1 penny. And every time it moves down, so if the price of a coin is $1 and it moves up to $1.01, you're now up a penny if you put a buy in. So this equals 0.1 cent gain or loss. And then we'll go up to the 10-cent lot size to show you guys the math. A 10-cent lot size means you're getting a 10-cent gain or loss with every tick the chart moves up and down. So, and as we go into the trading, we start doing the charts, all this information is going to come together for you guys. And if you guys want to learn more, you already know, you can go to the free signals group. I always give advice there. And I'm not going to be going live here as much teaching, but I'm going to be doing it on the Zoom calls for everyone in the group. And I'm going to be giving the lessons there. But just to get it out here, I want to do it here for you guys. And then the next lot size would be, it's the lot size most people want to use, is the 1.0 lot size, because this is when you see most big traders making 30K, 40K days. Everyone sees that. So that has $1 gain or loss per tick. So if the price is $1 on a coin and it moves up to $2, you made $100 quickly. So just off 100 ticks. So that's how that works. I'm not going to teach a pip conversion and stuff like that because it might get confusing, but 1 cent gain, loss per tick. So this is per tick. And then actually I will teach this so you guys can know the math. And then 10 ticks equals 1 pip. So that's important to know. Most traders talk in terms of pips, like, oh, we're up 1,000 pips. That means they're up 10,000 ticks for the week. So that's good to know. Next, you need to know your stop loss and take profit. Every time you take a trade, rule number 1 is must have a take profit. And rule number 2 must have a stop loss. If you're in a trade without those 2 things, then you're not really trading. You're just gambling. You're taking risks, and there's no such thing as trading if you don't have a stop loss to take profit, because you're not growing your account over time. You're not building your equity curve, as we talked about before. The whole win-loss thing is your stop loss and take profit. So my stop loss risk reward ratio and stop loss take profit is the same thing. So you need to put that in every trade, how much you're risking, how much you're making. And once you set that, you can jump in your trades for the week. Say you have 10 trades for the day, you can take all 10 and walk away and check it when you come back home or whatever you do. Come back, see how much out of 10 trades you hit. Say you hit like 7 out of 10. So let's do the equity curve simulator. Let's say we risked I like 3%, and then we took 10 trades and we hit 7 out of 10. So we hit 70%. So it takes your 10 trades for the day. You come back home, your account will be up $200. even though you lost 3 trades, up $300, even though you lost 3 trades, you'll still be up over time because you're not thinking trade by trade, you're thinking over a series of trades. So that's super important with risk management. And equity curve, I'll give you guys a link in the Discord and everything. I'll give you guys a link so you guys can track your equity curves, build equity curves, and you guys can do all that type of stuff. I'll add the link over to the link in the bio. I'll put the link there too. But this is risk management. This is very important, and it must be understood before trading. So always use proper risk management. If you ever find yourself not having a stop loss take profit, understand that you're risking, you're gambling at that point. So after that, toward risk management, I want to go into teach trading psychology. If you guys a breakdown on that, and I teach this stuff in detail also in the courses and stuff. I teach in detail. It's just the courses cost like over $3,000, so a lot of people won't get to spend that type of money. So I'll give a little breakdown here for you guys, and if you guys want to learn more in detail, you guys can get the bundle for like $97 and learn everything. But if you're here right now, you're probably lucky because you're getting a lot of free sauce. A lot of people are gonna miss out on this, but whatever. Trading psychology. So talking about trading psychology, I'm gonna start off with emotional trading, logical trading. It all boils down to these 2 points, and just to keep it very simple so it's not overcomplicated. And there's other tips I teach too, but to keep this very simple, emotional trading. What is emotional trading? You hope a trade is going good. Hope is an emotion. What's another emotion? Fear. Fear of missing out on a trade. You can have fear of getting in too late. Fear of just have fear in trading. That's one of the emotions that pop up. Greed. You can get too greedy. You can be in a trade and you'll be up a lot of money and you'll be up past your risk reward. You have good money in your account, but you just get too greedy. You stay in it and you give back all the money that you just made because of greed and stuff. So greed is an emotion. Hope is an emotion. Fear is an emotion in trading. Also, pessimism. Let's slower that word. Hopefully I can fix it. Pessimism is an emotion too. Like just thinking that you're not going to be good enough, that the trade's not going to go good, stuff like that, because it's going to stop you from taking trades and taking action. When you trade, you want to just leave your emotions away from the workspace of trading. Once you start getting emotional, just leave trading for the day and just go breathe and just get your emotions out and come back when you're in a logical brain. Another trade emotion that I see is revenge. A lot of traders go after revenge. They'll lose money and they'll come back for revenge. Like, oh, I'm going to make all that back. I got to make all that back. They'll get in this revenge mindset and they'll get stuck in a rabbit hole of emotions. So understanding these emotions is, if you feel any of these emotions, you know that you're emotional trading. So always keep a track of how you're feeling. Let's go into logical trading now. Now we're going to logical trading. So trading off risk reward, which we just taught. Trading off math. Having a stop loss. Following a trade setup. You always take. These are examples of someone who's trading in a logical mode. They know their risk reward. They're like, okay, I'm risking 1% of my account to make 3% of my account. I'm risking 1% to make 4%. I'm risking 1% to make 2%. I'm risking 1% to make 5%. They know how much they're risking and how much they're gonna make every trade. If you never not know that, you're in emotional trading. trading off math, it goes down to knowing your equity curve. Like they know over time how the equity curve is going to look if they keep taking trades with this risk reward. That means you're in a logical state of mind. And we just taught risk reward management right before this, and we also teach it in the groups and stuff. Having a stop loss and having to take profit. That's an example of logical trading, because now you know for a fact every time you trade you're gonna have a stop loss, you're gonna have a take profit. You know where your stop loss is gonna be. You know where your take profit is gonna be. You know, so every trade you take is gonna be the same trade. It's like, okay, my stop loss goes here, my take profit goes here, and that goes into step D, following the trade setup you always take. Every time you see this setup, every time, for example, look at this trade we call here. Every time I see the trade bouncing off the average, I know it's about to bounce all the way up. We call it the trade up. Also right here, see this setup, I know it's so far away from the average, it has to come back to the average price. Trade right back down. I'm not in the trade because I'm teaching. I wish I would be trading right now, but I'm going to finish teaching so I can start trading. I really don't want to miss too much moves in the market. In like 30 minutes an hour, we're going to start looking for our trades, but market is taking a nice move down right now. Alright, so you always want to have a trade setup that you always take, and once it hits your take profit, cash you out, so you don't have to watch the charts. Like, example for this trade, it hit take profit, it automatically collected my profit, and there's no worries. There's no like, should I take my profit or not? It's your money. Once the money's in your account, it's your money. Now your risk changed. If you're up here, you're up $100, or you're up however much money in your account. You could be up 20K, you could be up 30K. That's your 20, 30K. Like, why would you leave it in the market to come back down like this? And this happens all day in the New York session. They'll go one way, come back the other way, and they'll take everyone's money who don't have take profits, who don't have stop losses, who not trading logically. If you're not trading logically in the New York session, you're gonna get slaughtered. But that goes to trading psychology, and then I teach more trading psychology over here. I'll put it here. In the link in the bio, you guys can learn trading psychology here. You can learn risk management here. Or for my birthday month, you guys can get the bundle. Like the first 10 people will take advantage. You get all these courses, every course I teach for $97 instead of paying like $40 for some, 100 for some, 30 for some. You can save a lot of money, and you can get the premium signals. So you can go deeper in trading psychology there. Next, I'm gonna go into chart patterns. This is super important too. So to teach chart patterns, first, what is a chart pattern? So you need to know what a chart pattern is, and I'm gonna give you 3 chart patterns right now. You top 3 chart patterns right now that I love to take, and it's gonna be important. So, what is a chart pattern? A chart pattern is this, for example. That's a more advanced one. Let me see if I can find one that's simplified out. That's a really nice chart pattern though. Okay, I'm gonna show you guys this chart pattern. Take that off right now. Use the red outline tool. And while I'm teaching, I'm gonna change the colors of the charts for you guys, so you guys can see more. Alright. So this is a chart pattern right here. Zoom in, make sure see it crystal clear. This chart pattern, it uses this line right here. The price comes all the way up here. It comes up away from the average, and then it finds a price that's just way too high away from the average. It gives you a rejection signal. It's like, oh, we don't like this price. It'll go up and it rejects, and then it'll start coming down. It'll try to come back up, and then it rejects again, and then you get these big moves like this. So this is a really advanced pattern right here. You can make a lot of money with this pattern. I'll show you guys. Let's see if I can find another chart that's happening right now on gold. I don't know what this box is. Move that on gold. That was a trade we caught earlier. All right, here, perfect. So we called this trade last night on gold. It came through. It came down away from the average, and then it came up. Tried to go down. It failed, and then it came right back to the average price. Same chart pattern. So that's one of my favorite chart patterns. You can catch that over and over. Let's see another chart pattern I can teach you guys. Let's see this chart. This chart right here, perfect. This right here is a rising wedge. So the price comes, pushes up, it breaks it, retests, and then takes a fall back down to the moving average. That's another chart pattern, very advanced, and it happens over and over. So every time I see this happening, I know my risk reward, I know where to put my stop loss, I know where to put my take profit, and I take my trade using it. So I'm like, okay, I see this happening. My stop loss is right here, right outside. Take profit is going right here, 1 to 3 trade, and then it hits it perfectly to the T. Over and over, and you guys can back test this. You can try it out a lot. You're gonna see me trade live. You're gonna see me take these chart setup patterns. That's 2, and then I'll give you guys another chart pattern. I'm gonna clear that. This one right here is a really good chart pattern. It's called a support or rejection. It's called a support or resistance rejection. When you see multiple wicks just keep rejecting a price, you know you're gonna get a move up. So make sure you guys can see that on TikTok. So you see all those wicks, it just kept rejecting, and you see so much rejection is that you know the price is going to change directions. Right here you see it again, right next to it. Price just rejects and rejects, and it takes off another direction, comes down, reject, comes up. It does that all day. Price moves like that a lot, and the reason why it moves like that is because the bulls and bears are fighting each other. So sometimes the bears are in control, sometimes the bulls are in control, and when the control is changing, you see a lot of rejections. Like the bears can't hold the price, they can't go down, it just comes up wicks, and then you know the bulls are taking control. So every time you look at a chart, when you're thinking advance, you want to be like, who's in control? Is the bears in control, or the bulls in control? And then how can I make money with them? And those are the thoughts you want to have when it comes to chart patterns. Very advanced topic. If you want to learn more about chart patterns, you can do chart pattern mastery. Market cycles is an extremely advanced topic. I'm going to teach you guys market cycles. This right here is going to take your trading to the top level. I don't teach this for free normally because it's really advanced and it's really hard to teach. But we're going to do it right here. So I'm going to have to close this for that, guys. Close that. So this is a chart pattern right here. We got, alright, this is perfect. I can show you from here. So make sure you're seeing it. The chart does 4 things over and over continuously. Again, if you know these 4 things, you can just find what part of the market cycle it's in, and you can trade it just the same way. So these are advanced things. These are like things that not taught to anyone. and a lot of top traders hide this info. So we got this part of the cycle. I call it part number 1. That's supposed to be a 1, guys. That's a 1. Then we got this part of the cycle, 2, and then we're gonna have this part of the cycle right here. That's 3, and then I'm gonna teach you guys what each part is right now. Then we got the come back over here. This is 4, and the price is gonna come back up because it's in the cycle. This is the cycle of the markets, and it does this over and over again. And you guys are gonna see this a lot. So we'll see where we're at right now. So part number 1 in this cycle is a trade-in range. You see a trade-in range, it's in a 1 state. The next state you're gonna see is a breakout. It can break out up, it can break out down, and you guys gonna know how to trade both ways and know where to put your stop loss and take profits as you go through the private Discord and get mentored and stuff like that, or take the course. But it can break out up or down, and then you got a flag. At the breakout, it's gonna probably see a flag. It's gonna flag, find a support, and then you're gonna see at the flag, part 4, it comes back up and forms a trading range again. So 1, 2, 3, and forms a trading range, comes back up into a trading range, and then the cycle starts all over again. Now you're in a trading range again, and after the trading range, it's gonna go right back to a breakout. It's gonna break out in one direction, and you guys will see this over and over. So you see trading range, breakout, try to come, flagged up, it came back, it broke again. So I gotta find the start of the trend for you guys. So this is a trading range right here. I'm gonna draw it on it. This is a trading range. It broke out, it flagged up, it came back to a trading range. So now we formed this new trading range. It broke out of the trading range. Not enough strength, fell back into it. It's very minute. I really have to zoom in. So it broke out here, came back, tried to break out again, came into a trading range. Breakout flag, trading range. Trading range, breakout. Let's see, this is one of the toughest topics to teach. That's why I recommend taking the course on this, but I'm trying to do it on a small phone screen for you guys. So we see a trading range, breakout. After the breakout, see flags come back, and then we see it form part 4 of the next trading range, come back, try to get this price. It can't, does it, and then from there, after this trading range right here, the trading range looks weird, but let's consider the trading range is kind of sideways. Then it breaks out again to the upside. As your eyes train more, you're gonna see more of this, and I'm gonna teach you more in market cycles. But these are market cycles you need to know. Trading range, breakout. You need to know how to trade trading rate, how to trade a trading range, how to trade a breakout, how to trade flags, and then how to trade. And then 4 is a trading range again, but it's like a sideways trading range, but it's a trading range nonetheless. And it comes back to a trading range. And the reason why I separated these two is because this is a sideways trading range. Sideways. This could be diagonal. And this is very advanced. Like traders don't teach this, so I don't know if you're gonna be able to learn it somewhere else, but you guys can learn it in the market cycle mastery, where it'll be taught in more detail for you guys. Gotta minimize it. You guys can learn it there, market cycle mastery. Next up, we'll do how to grow a small account next for you guys. So let's say you have a small account of, what's a small account? $100, $10. Like how much is a small account for you guys? $1,000. Someone said they had like $50 yesterday. So, and I have the video where I grew the $50 account to 3K, so you guys can see it. But say you have your $50 using the risk management skills that we learned, that you guys learning in the video, earlier in the video I taught risk management. Using those skills, you know your starter equity, you know your win probability, get out the way. So if you're an amateur trader, you want to keep it like 50%. If you're using the tactics that we teach and you learn, you can have it to 60%, 70%. And then you want to know your risk reward ratio, how much you're risking per trade, how much you're going to win. You can keep it at 4-to-1 right now, or 3-to-1, 2-to-1. You can test them out. If you're growing a small account, I recommend staying 3-to-1, 4-to-1 area. 2-to-1 is like, you might as well go work a job when it's 2-to-1. So 3-to-1, 4-to-1, and then you want to take your trades. So you take 1 trade a day, 30 trades, or you can take 10 trades a day, however you trade. If you're trading a premium, you can catch the trades, and then you have your risk. So you risk 3% of your account, and over 30 trades, that $50 is went to 180, went to 200. Right here, $50 went up and down. So this right here is not a profitable strategy. So you have to get your win probability up to 60% if you're gonna go for 4-to-1s. And when you do that, that $50 turns into 400. And this looks like the scenario where we traded, and you see on the TikTok, we grew the account to 3K. The account just goes up. It has no choice but to go up over time, because as long as you're hitting all of the goals of your win probability is 60%, and if you're trading using the signals, you'll be at 70, 80%, 90% trades. And then your win-loss, you're going for 4-to-1s, and you're risking 3% of your account, which is high risk. That $50, just risking 3% of your account, that $50 turns into $450. So it's really easy to grow a small account, and this is how you grow an account. And for a large account, it'd be the same thing. Yeah, 50K. Or if you guys get the $1 million accounts, let's say you have your $1 million accounts, you go get funded, and you take the advice, you go get funded, you have $1 million in your account in 1-2 days. Literally this week, you have your $1 million in your account now, and 60% accuracy, going for 4-to-1s, and you don't want to risk 3%, you risk 1% of your account now, because you have so much. Now that mil just went to 1.8 mil in a month. Went to 2 mil in a month. This is how you have $1 million months, guys. When you get to $1 million month levels, this is how you're trading. You're going for the trades. And then when you're up like this, you don't even have to go for 4-to-1s. I would go for 3-for-1s. And just go for 500K months, because it's 500K in a month. Like, there's a lot you can do, a lot of property you can buy. And you're just going to find yourself cashing out and buying, hopefully, assets and not liabilities, but you can buy whatever you want. Treat yourself nice. This is how you grow a large account, guys. You lower your risk to like 3-to-1, and you risk 1% per trade to make 3% per trade. So 1% of $1 million is $1,000, and every trade you make 3,000. And if you lose a trade, you only lose 1,000. And all you have to do is be 60% accurate, which I teach you guys with the setups I have. Those are solid setups that are accurate a lot of the times. 70% accurate on some of them, some are 90%. So you have a lot of accuracy, and you can grow any account using that method. So this is really advanced. If you want to learn more, go into how to grow a large account. I'm not gonna teach the trading setup, so I can go into the indicators here right now, but I'm not. I'll do a 5-minute chart. I did the indicators yesterday for you guys, but I'm gonna keep that for the paid people because a lot of people are paid for that, and I don't want to do them injustice by giving it away. But let's see. So we got the 5-minute chart, the 4-hour chart, and the 1-day chart. Like, which one do you guys want to learn how to master? I'll teach you guys. And if there's none, like, I'll just leave it out. I'll go to the sessions. The 5-minute chart for scalping. This is how you scalp. This is swing trading, and this is day. This is like it's longer than swing trading, but it's still considered swing trading, day trading, stuff like that. So use different charts for different stuff. That's why on the lives I use the 5-minute chart so we can catch scalps together, and then after the scalps, you guys can make a lot of money. I think I'm gonna get into charting after. If you guys, I learned a lot in this. I might teach one more advanced topic. Yeah, I'll give away one more secret before we start trading. Actually, no, I don't think I can do it because it wouldn't be right to the people who signed up. So let's get into some trading. Start trading these charts. Alright, so you guys get to see me charting live, everything like that. So this month boomed up. 20 days left of the breakout. It's broken out up, all-time high. Broke that high with a gap, so they're shooting up on GA, like they're just shooting up. They took out these. Took that. Probably coming for this. Let's get into the day chart. So we're looking for two possible scenarios right now. Keep it zoomed in. So the new day just started. We have a new day going on. And it's a perfect day. So I'm looking at some buys right now. I'm really looking to buy today. But before we get into buying, I want to see how everything behaves. Keep everything on screen. I want to see how they react coming to that level. I'm really expecting liquidity grab, but broke out. Yeah, for the next 2 hours, we're getting up momentum. So yeah, we're headed up right now, guys. If we come past this, choose one violet, and then we're headed up to here now. That'll be a great trade. So let me see this trade. So GA, I'm looking at a buy. So I'm going to take that trade right here. It's not yet 7 o'clock. Maybe I might wait actually. Yeah, I think we have to wait, guys, but I'm going to take that trade. So I'm trading right here at 1% of the count. I'm going to show you guys how I scalp. Put my stop loss to my take profit in there. See where the stop loss is at. I don't know, actually. They really didn't get, they didn't get too much. Flag. Yeah. So this would be the proper stop loss for this trade. 192,477. 192. It's probably gonna hit it too. That's why I really don't know if I want it. So we're gonna see. We're gonna set this trade and we're gonna move on to the next trade. So take that trade with 1% of your account. That's the first trade. And there it goes. It goes the breakout to the upside. Alright, so now we're looking for the next trade. Ooh, I'm liking the fall for this one. Which appears at GN. I'll have to come. I want to post this trade in the group for you guys too. Let me do that. Alright, so I'm posting these trades right now for everyone. It's still very early in the trading day. These are trades I normally take by myself. I wouldn't even call out. This is between sessions right now. So right now we're between sessions. Looks like we're about to get a move up here. So we're checking that out right now. Yo, Muhammad, what up, bro? Doing good, just doing the charts for today. I'm about to call all the trades. And then while we're in the trades, go grab some food and then trade the Asian session. I really want to short this pair, but it definitely has room to keep going down. I mean, to keep going up. Right now, the bulls got this in control. Yeah, the bulls are here right now. There's no... Yeah, we're going up. We're going up on this pair. Let me see. Is that right? It's a strong bull candle. Yeah, so I'm going to call it right here. Let's see what the money is at. What type of trade? You guys can use this stop loss for that. You're in the gold right now. Yeah, we got pre-day going on right now, so just the pre-day trades. I almost really wanted to see a turnaround on this pair, but just not gonna see it. All right, so I'm taking this trade too right here. And I just want to show you guys how I scalp. How I'm able to scalp. You can take 10, 20, 30 trades a day and hit them all at a 70, 80% and grow an account. So we're doing this. Yeah, that's GN. Put my stop loss on it real quick. Take a photo for the group. That's kind of why I don't. That's why the sitting group is cool, but the live trading sessions are the best because you guys can see exactly where I enter, where I exit, and I think I'm just gonna move on to live trading signals more than group calls. Put a stop loss on 27.0. Actually, stop loss, moving it down to here, guys. Let me proper stop loss on this. $20.70.15. 20.70.15. Then take profit is 27.3. I really want to get more pips on this move, but we jumped kind of late. 27.322. All right, and we're up on our first trade, guys. We're up on this trade too. Let's go down the list. As you guys learn this stuff, this is what you guys can do for every pair. Just jump in, every pair, take the trade. I think we're just gonna have to stick to live trading over signals because it's tough for me to call it and then post it. But I'm posting this method, posting this trade right here. I don't want to miss out on this pair, but it looks like I am. Oh, we're not. Okay. This pair right here is like Asian banks are about to open up. Right now we're in the middle between the Asian session and New York session. It's Australian banks. So let's go to Australian pairs. For this pair right here though, double check. Yeah, I'm bullish on this pair. Very bullish right now. Bullish to here, bullish to here. Let's see. Falling, falling. Tough pair to be bullish on. See the 4-hour chart. Okay, here we go. So this is why I'm bullish. Okay, yeah, so I'm bullish on this, guys, to right here. I think we're going to, so I'm taking a buy right here. I just jumped in the buy. Let me put it down on the chart. Oh, you said gold? Yeah, I'm gonna get into gold. I'm definitely gonna get into gold. 1000% getting into gold. We're gonna hit. We're probably gonna go past it though. Go to there. We caught this entry. I really want to see it come here and take that, but for a guaranteed move, we're gonna use that. That's the point for our stop loss. So I'm putting the stop loss in right now on my trade. Make sure every time you guys take a trade, you put in your stop loss, you put your take profit, and you risk 1% on the trades. 159. So this what it's like in the premium. This I just call you get a lot of trades more. You get more trades a day, so you can grow accounts faster with lower risk. 159.722. That's huge bearish momentum actually. Bears are hair heavy, but yeah, the bears are here actually, guys. We're probably gonna have to I do want to track this for another second. Yeah, the bears are just bears are here. Murdering this pair. Yeah, but the best stop loss would be here, but we're not gonna take that stop loss. We're gonna take the stop loss here, guys, and just let this trade ride. His stop loss would be okay because we're early right now. We're gonna. Someone said gold. I'm gonna get to gold right here. I'm gonna post this in the Telegram group. Let's try right here first. I feel like I should call some monster trades for you guys, like just the giant ones. I'm gonna try to give you guys a giant trade. Alright, so right here, it didn't happen yet. Oh yeah, this short is gonna be perfect. Let's see where we're at. I missed out on it. Exhaustion, turn around. One push. Alright, so we're going up right now for this move right here. These are the small trades. I want to call big trades. I really want to catch the big trades, but we're early right now. We have to wait like another hour. So let me see. Give me a second, guys. Alright, I'm back. I'm back. Let me see. Camera. Alright, so boom, I got that trade. Let's find our next pair. See how gold is doing right here. Gold is just killing them. Gold might be taking that. Let me see what just happened with gold. 2 hours. It's looking like we're about to be catching a short in gold, but it's like so much bullish momentum. I hate to call it, but we're still downtrending. Yeah, I think we're taking a short with them. Let's see. Oh, I definitely think we're taking a short with these. Alright, it's still super early right now, guys. Like, this is a very, very, the Asian pinks are not really open right now, but regardless, I think I'm going to be taking a short. So let's see. They came all the way down here. Why'd they come down here? That's why they came down there. Okay. I'm just getting major short vibes from gold right now, guys. Getting major short vibes. Yeah, so I really like that as a target. This rejection to the upside is like, gold is so perfect. So right here, this is a cool moment in trading actually. This is like separates advance from non-advance. It's called a patience, and like just really waiting for the trade setup to come to you. It's not rushing in. Like, even though I see it, it's taking a great fall. I think I'm gonna get in this trade early though, and then if we if we hit the stop loss, it's okay. I'm gonna take this trade on gold. So I'm taking that trade on gold, and I'm gonna take this. I'm gonna bring this all the way down. This is a big trade. So keep your risk 1% to 3% on this trade, guys. Don't over risk, because when the Asian market opens, they could pop liquidity up, take everyone out, and then go down from there. So I might even move the stop loss up a little. So 1927.2. And take profit. We're going for 1912. I'll just put 1913. And this is it. Trading done for the day. After this, set your take profit, take your stop loss, put your risk reward ratio, make sure you're risking the right amount, you're not over risking, because if the trade does hit our stop loss, we'll be looking to take a re-entry. So keep your risk reward. If it hits stop loss, let it hit stop loss, and then we're jumping right back in, because it's early in the day. But it's a trade I'm happy to go eat dinner and eat something really nice too, because I really like the entry we caught. Gold, you can't make this up with gold. It's just like so perfect for a pair. And then what other trades we call, guys? So we called this trade right here, GA. GA is about to. Yeah, GA just rejected. All right, GA is going down, so I'm closing GA, guys. Let me see something. GA just did something really nasty. We can keep our stop loss on it. I might even move our stop loss out to here. Make it tighter. So I'm going to make the stop loss tighter. And we could stay in this trade with less risk, and it'll be a great trade still. Win or lose, we'll keep that. What other trade did we take? We took this trade right here. We're up on this trade. We're doing great on this trade. And we took GN. This trade is starting to go for us, so that's good. This might be starting to go downward for us. Time is at 7 o'clock. New day just. Asian banks are starting to open right now, 7 a.m. over there. So I'm curious to see how they move. They just made a big move with gold. Oh yeah. I really like. We could use this top risk for gold too, but I'm expecting Asia to come in and make a power move up and then take a turnaround. So keep my stop loss up there. That's why we risk 1%, so we can sit in these stop losses and we can let it turn around fully. But if you guys over risk, take this stop loss right here. You still have a great chance to catch a huge move. This is trades. I'll probably come back on mid-Asian session, go live again. I'll notify everyone in Telegram when I go live, and instead of posting signals in the Telegram, I'll just notify everyone when we're going live, because it's a lot easier to do that than like pause while I'm trading and post signals. And then for the premium group, I'm just gonna live trade with you guys, so you guys can just trade with me live, get in with me live, get out with me live, enter, exit. I'll trade the New York session with you guys. I'll trade the London session. I'll probably trade 1 to 2 sessions a day with you guys, because I do have to sleep. And then I'm in these trades as well, guys. So we're all in these trades. This is the original stop loss. That's a stop loss if you have over risk. Let's see where else we're at. Yeah, we got a rejection over here already. Oh, that makes a lot of sense. Yeah, guys, we might be getting this move right here. Because it started rejecting. Might see a move right down to this line right here. It just hit the new high. The best stop loss for this trade, if you're holding it, guys, is down here. If it takes us out over here, we're gonna just exit with grace. Let me see what else. What other trades it would take. That's okay. Alright, yeah, we took some great trades, so we just gotta let them play out. We'll sit through it. I'm gonna go eat some food, and I'll get back on. I'll post updates of the trades. These trades are some great trades. Trade with the proper risk management and everything I taught you guys. I'll be back on later. Peace out.